Now, when it comes to looking at time frames on a market profile basis, to get a slightly better picture of the several days around you, right, is you look at the profiles of each day. And what I've done here is I've overlaid them over the candlestick chart, but usually you can just look at them on their own profile chart each day on its own, just like this, without the underlying candlestick chart. All right. And here what you want to do when you're looking at the picture in terms of the profile chart, right? Instead of just focusing on, the latest market day, for instance, which would be, this day, right? You want to look at this day in the context of the previous days before it. All right? So I've highlighted the last 5 days before that. This was a market holiday, which is why it's empty in the middle. Okay? Now, what you want to look for here is what is value doing. All right, in these 4 days in a row, here's value. Next day, and again, we know that value is the place where the most trade facilitation is taking place and where the most volume is, and this is the thick part of the profile, right? And so it's here. The next day it moves a bit higher, so you think, oh, maybe a trend is starting again. But then the next day it's back down here, and then here. And when you look at it as a big picture, so now you're looking at them 1 day at a time, right? Your bigger time frame in terms of market profiles, when you look at them as a group, and as a group you see that they're just moving sideways. They're not really doing anything. Up, down, up. So they're all over the place. Okay. Now, when do you see that initiative move has taken place? In this bar, right? This was the breakout. You got a trending move, and look where value is now. It's way above these. So it's shown that the market now sees values at a different area. They've rejected this whole area and they've moved up. Okay. Now the next day is like a sideways day that did nothing. So some people could look at that and go, oh, it wasn't bullish or bearish. But it was bullish in a sense that value, all right, was placed higher than the day before, which means that the market is still seeing that this now higher price is a fair price. Right? And that's an important thing to understand. Sometimes what you'll see is, let's say a day after this big up day, a day opens up here and just kind of moves down all day long. And some people look at that and go, oh, that was a bearish day. That wasn't good for the market. But if you look at it from the context of value, which is what we're trying to do here from a slightly bigger time frame of the profile charts, even if it opened here and started going down all day, right, and ended here, if value was built higher than the day before, this was actually not a bearish day. This was actually a bullish day in disguise. It looked bad because it opened high and kept going down all day, but it didn't reject this value. It didn't get rejected and start trading down. It still traded at a higher price, right? The fair price that was seen was still higher than the day before, which is good for the market. This is how the market keeps going up. So when you combine this with the bigger picture view, right, of the candlestick charts, that gives you where the trend is, and that tells you, it zeroes it down, starts at the daily, you go down and you see which direction you should lean on. This gives you a different type of view of the market, right? It shows you how value is migrating over the last few days and allows you to determine who are in control, the buyers or the sellers. Just by looking at this instantly, you can tell that the buyers are in control because value is moving higher. Okay, and if it was all over the place, you could tell that is a bigger balance area like it was here, just because there's no real movement. All right, there's no real migration of value, and so this allows you to see it better. So in the candlestick charts, the way we looked at different time frames was simple. We just choose, let's say, a daily chart. Each bar becomes a day, and then we go down, let's say, to 120-minute chart. Each bar becomes 120 minutes, and so on and down. Now, one thing to note here is that, some traders ask, well, which time frames do you look at? Is it at the 60? It doesn't really matter the exact numbers. It's just all about the general look of the chart and what you see in there. If I want a bigger picture view, it doesn't really matter if I look at a 60-minute chart or a 120-minute. It's just what view do I want to look at. So when I'm doing my top-down approach, I'll start at a daily chart, I'll hit day, and then I'll go down to, sometimes it can be 120 minutes, sometimes it can be 60 minutes. It doesn't really matter, but the whole idea is to go down from the big picture time frame all the way to the smallest. Well, when you're looking at profile charts, we're not doing it in the exact same way. It doesn't lend itself as easily to doing it that way. So the candlestick charts give you that kind of view, and with the profile charts, you're automatically looking at each day's profile on its own. You're not choosing, let's say, a 30-minute or a 15-minute or a 16-minute, right? If you're overlaying it on top of a candlestick chart, it doesn't matter which time frame you're on the candlestick chart. You can draw these profiles. So right now I happen to be on a 10-minute chart. So let's see what happens when I take it out to a 60-minute. So you see on a 60-minute, we still have the same thing, it just becomes really zoomed out. We see these same things we were seeing before, it's just quite zoomed out. Now if you weren't overlaying the profile charts on top of a candlestick chart and you were just using a normal profile chart, the way it would pull it up would be each day would automatically give you a profile, right? You wouldn't have to choose a specific time frame. It would just show you each day would be its own profile. Just like here, each day is its own profile. But the idea of analyzing the market from a broader picture using market profile is that it quickly allows you to see the volume clusters, right? And again, you don't look at any specific day's profile structure by itself without looking at how it compares to the other days and where it's building value in comparison to them. Now if we wanted to do the top-down approach with the profile charts, there is something we can do, and that's what's called a composite profile. Alright? So let me show you what that is. You see here we have the profiles overlaid on each day. So this was day 1, day 2, day 3, day 4. Right? Well, what if I just wanted a bigger picture view of what was happening in these 4 days as a group? Without looking at 1 day, 2 days, how is volume building horizontally across these days as a group? So let me show you how we can do that. And here we're now looking at them as a group. What I've done is now I've overlaid this profile chart over top of these 4 days, but all as one group, not one day by itself. How is this all building as one balance area? Because indeed it is one balance area. It's not just a separate number of days. When you're looking at market structure from the profile perspective, and from any perspective really, it's always about the continuation between days, what's really happening on a bigger picture. So here, when we're looking at market profile, this is how we look at the bigger picture. We group the days of balances into one structure, into one profile. And now it's much easier to see that here, right, and these prices right here, from around 1403 to 1407, it was a big volume cluster, a big high volume node, and down here too was another high volume node. Now we can see that very quickly in one instance. Now again, with the charting software that I'm using here, which is Market Delta Charts, it allows you to just right click on the chart, press draw, right? Draw profile, and you can just draw it. You just go like this and boom, it shows you it right there. That's how you do it. On some other charting platforms, this is not possible. It doesn't allow you to do that. So what you would be doing, it allows you to, let's say, be just looking at the profile, not overlaying it over top the candlesticks, be just looking at several days of profiles, and to choose to combine them into one composite profile. And that's what this is called, a composite profile. So pretty much all of these platforms will allow you to create composite profiles. And what you want to do to create them is you want to look at where are there clusters of days, and that becomes a composite profile. There's no sense, for instance, in creating a composite profile here. You know, this isn't a cluster, it's a trend, so that's fine. It's not going to show you much difference by clustering it together. But here, when the volume is going sideways, it's much easier to see where the high volume node is as a whole in a balance area when you cluster them, and that's what gives you the bigger perspective here. And let me show you how this plays out on the much larger time frames when we're looking at the bigger trends and we want to see where were high volume nodes on the big time frames if we're analyzing the market from a top-down approach. Okay, now we're on a 60-minute chart, and this is showing us maybe about a month and a half of market action. Let's say we were doing our top-down approach, and we started at the daily chart, and now we've zoomed down to the 60-minute chart. And on the 60-minute chart, we see that the market had bottomed out here and started a pretty decent uptrend. And now we're in the pullback or correction phase right here, let's say. And let's say we're wanting to analyze the market as of now and seeing where is some real major support. Well, we see that just by looking quickly at the chart and knowing about key reference areas, we see, for instance, that the first key support when we're dropping down here is going to be this gap where this last upside push started, this directional conviction started. So this is going to be a good support area. Then we see there's this major low here that's likely to provide good support because this was the start of this upthrust here, right? And then other than this other gap here, we want to see, well, what about high volume nodes, right? This isn't very easy to look at a chart like this and see where were there horizontal high volume nodes on this kind of time frame. So what we would do, if you're using a software like this, it makes it easy. You just draw it right over it. If you're using other software, you would have to look at a market profile chart, not a candlestick chart, and then create the composite profiles. But here what we would do is we just right click, we would go draw profile, right? And we would just draw it over here. Why here? Because this is the area that we've noticed just visually was a few, maybe about 7 days or so at least of price moving sideways, right? So when you're looking at the 60-minute time frame, you're not going to look at a tiny little area, let's say like this, and draw a profile. Well, if you had zoomed into this was the market moving sideways temporarily, but it's not really going to act as the major support when you're looking at this time frame. Each time frame you're looking at, you're seeing, well, visually, that's how easy it is. Visually, what looks like an area that I can see, and this looks like a pretty big sideways area that we can see. And so let's see what happens here. So now we think, okay, if the market doesn't bounce here and fails here, this could probably be a good area of support because there is a major high volume node right here. And let's look at what ended up happening. Okay, so we look at, indeed, the market gapped down right through this gap, even through this previous low, and hit support here, right? Now, if we were just looking at the candlestick charts, we wouldn't have known that there's this good support here. We don't see the horizontal volume, but here we saw it. It's pretty clear to see that this key reference area could have provided great support. So this is what happens when you combine these two types of charts on a bigger picture top-down approach look at the markets, right? It's a multi-time frame view of the markets. And in general, that's the power of looking at multi-time frames. If we were trading this day here on its own without looking at the context of the larger time frames, we'd have no idea that there was going to be a sharp bounce in this area. We would have seen a major gap down, right? And it would have just looked like everything was just going to be crashing down. But this was actually a great buying opportunity. And from just a market analysis standpoint, this was a place where we would have expected the bigger time frame buyers to come in, which they did based on this previous market action. So I hope this shows you the importance of looking at multiple time frames. Hope now you understand how to do it on a top-down level. It's going to take practice. Sometimes it'll be confusing in the beginning. Don't worry about that. You gotta try it out and test it out. Look at your candlestick charts or bar charts. Look at them, start narrowing down, zeroing in from the top to the bottom, from the bigger time frames to the smaller time frames. And then while you're doing that, once you see certain areas where the charts are going sideways, you can overlay a composite profile on that. Or if your charting software doesn't allow you to do that, you just take a look at a pure profile chart and group those days together, and it'll give you the exact same thing. And then finally, when we go back down to a view of what's happening in the last few days, as in here, we look at them on the basis of what is happening today with respect to what happened the previous days. We never look at a single day alone. We never look at a 1 minute chart or a 5 minute chart or whatever it may be by itself without the context of the larger time frames.